As you heard, we are recording right now. There will be links sent afterwards if you opt in to receive the recording. And if you reach out to Eli and myself and you need the copy of the presentation, we can get that to you as well. All right, and now with that, I'm going to go ahead and start sharing the screen, and we're going to start with Elias Maulin. There we go, share. Can everybody see my screen? Can you see my screen, good doctor? Eli?
Yes.
All right, so this is Eli is the founder of Brickell Capital Finance, about to turn 20 years old. Congratulations, Eli. Trusted lending partner with the BBB, the FSMSDC, the NMSDC, FDOT, the list goes on and on. Broward County, Miami-Dade County, Pinellas County, a lot of municipalities, a lot of cities. On the agenda, you see the agenda that we're going to go over with. All of these are financing that can help contractors. Eli is a seasoned expert in alternative financing, non-traditional funding, we call it. I mentioned he's a trusted lending partner with so many there, including the NMSDC and the FSMSDC. I'm Kurt Jimenez, two-time Emmy winner, his director of community partnerships, first Latino to anchor in English in ESPN history. And our mission, why we do this together, is to bridge the knowledge and wealth gap. And Eli, can you tell us a little bit about the business financing that you do for
Sure.
contractors under Brickell Capital Finance, and focus down on the pillars, right? The pillars that you always talk about are high documentation, where you need the heavy taxes,
Yes.
middle documentation, and then no documentation.
Yeah. Thank you everybody for being here. I personally want to thank Dr. Sandra Palmer for having us and putting all this together. Please do reach out to her. She's great to work with, very knowledgeable. If not, she'll find any questions that you guys can have. Thank you for being here. Everybody knows that knows us. We've been established for 20 years. I sit on the board of the Better Business Bureau as their treasurer. Our company has done financing for 20 years. We've explored every type of financing out there, so we're pretty much knowledgeable. And, first we wanted to go over like some of the business financings we do under one roof, which is the SBA loans. We do term loans, franchise loans, everything that you see on this slide, factoring, accounts receivable, and we can pick, mix, and choose. This gives us an advantage over everybody else that we can go ahead and pick and choose. And we are experts in contractors and subcontractors. If you go to the bank, for instance, and get an SBA loan, right? They are only capable of giving you one type of financing. In regards to us, we can give you multiple types of financing. And we also do SBA loans here. The other advantage you have is that we pre-underwrite the loan to make sure that it qualifies for your lending capabilities. Once you go directly to the bank, if it's not right and they decline you, you have to wait 12 months till you're able to go ahead and process it again. So, Kirk, you want to go to the next slide real quick? We also have, we try to educate everybody on different types of business lines of credit that the banks usually don't have. Some of them they do, some of them they don't. We have unsecured business lines of credit that are up to $500,000. And then we have our secured line of credit that goes up to $5 million, right? That's based on our unsecured line of credit is based on cash flow. It's usually up to 10% of the annual sales. And then obviously, if you have secured, depending on how much, whether it's accounts receivable, equipment, or anything, on what's secured, is we're able to go ahead and secure that and give you an additional line of credit. We also have an e-commerce line of credit. And then we have supply chain invoice line of credit. And then if you own stocks, we can give you a line of credit based on those. Most people don't know that there's so many there's a handful, like 4 or 5 different types of line of credits. So we try to educate everybody in what's actually out there and what's accessible to you.
Eli,
Next.
question: when you say unsecured and secured, what does that mean?
Unsecured means that it's based on the unsecured is based on your cash flow. You don't have to put any type of collateral, such as your real estate or accounts receivable and equipment. And the other one that is secured, which is a higher limit, would be secured by those items.
Yeah, property or something like that.
Correct.
And the lines of credit and the unsecured are more accessible than, say, an SBA loan. Can you tell us the documentation involved to
Yeah.
getting an SBA loan
Sure. An SBA
versus
loan
a line of
requires
credit?
a lot of documentation, including your taxes, your P&L, and everything.
3 years taxes, correct?
Yes.
SBA loan.
And then
Corporate
as
tax.
far as our business line of credit, it's a simple application, 3 months of bank statements and the owner's driver's license, and it acts just like a credit card. And we could actually take second position. So if you already have an SBA loan, we can also give you additional capital to our unsecured line of credit.
What's the credit score limit on that
The credit
product?
score, you must have a minimum of 650 credit score. And the interest rates are on a month-to-month basis are 1.5. So in essence, business credit cards are at 26.99. SBA is at 11.5. We're at 1.5, which is every 6 months is 9%, 12 months is 18%. But you can use it on a month-to-month basis, so you don't have to pay all that interest as well, and it's spread over 12 months. So it really is good for additional capital that obviously if you get an SBA loan, they don't give you enough or you don't qualify for enough, we could go ahead and give you that second position.
Okay. But I thought you were working, can you go lower than 1.5 if you have better credit?
Yes, we do have a new line of credit that's available to us that just came out in the past month and a half. That's actually 12% per year, which is 1% per month. But those are for clients that have a credit with 700 credit score or more.
Thank you so much. Can you talk about now, this is the 5-pack specifically for contractors and subcontractors that you provide.
Yes, this was actually put between Kirk Jimenez and myself. This was actually his idea to push me because we had gone to Broward County, and Broward had an issue that they've got an enormous amount of contracts, but the contractors didn't have enough financing in order to get those jobs done. So we created a 5-pack, and in which what we do is, and all of these on the left hand side act like lines of credit. Use them as you need them, which is our business line of credit. If you got accounts receivables, we'll go ahead and we do spot factoring, which means that if you get a receivable, most accounting accounts receivable or lenders or factoring lenders, you have to give them every receivable you have. Not with us, you pick and choose. We also do contract financing, material financing, and labor financing, which they all work as you need them. Um, Prime example is we had a company that had 5 merchant cash advances um, came to us on 5 merchant cash advances and 700,000, 62% interest rate. What we did is that the client had there you go, 1.8 million dollars in accounts receivable. So we took the AR to pay off those high rate merchant cash advances. And then we gave them the accessibility to sell us $2 million worth of accounts receivable. And then after that, we also gave him 1.5 million in material financing and $250,000 line of credit. And we gave him contract financing. What is contract financing? Let's say you get a contract based electrical company based at one of the airports for $1 million. We will go ahead and front you up to 25% of that contract so you could start the job. And obviously, every 30, 60, 90 days, when you're billing the actual airport, it becomes a receivable, and part of that money would come to pay us out, and part of the money stays with you until the contract is done. So in essence, there were negative $700,000, and now they're in funding, and now they ended up with positive $7.50 million worth of funding, and now they're growing because we actually stimulated and came up with a good plan for them to grow.
And here, there's Eli. Thank you, Eli. Anything else to add? We're sharing your email, my email, and your cell phone. Eli's that guy who's accessible, but please be respectful and reach out via email to him and or myself as well. So thank you so much, Eli. Let me see if we have any questions. Any questions in the chat? I haven't seen any whatsoever. I think we covered
And
most of it.
always also try to reach out to Dr. Palmer, please, because I want her to be on all these calls as well. So make sure she
We're
gets.
we're we're coming to Dr. Palmer right now. We're hearing from Dr. Palmer. Dr. Sandra Palmer is the CEO of Above or Beyond, globally recognized business strategist with over 25 years of experience. Dr. Sandra specializes in helping construction business owners move beyond survival to build scalable, profitable, and sustainable businesses through her transformation programs. She equips leaders to close growth gaps, implement systems, and lead with confidence. She's a construction executive business coach at the Columbia University, so Ivy League, and was also named one of the top female entrepreneurs in the Americas by the World Bank. And so let's go ahead and focus on what you're talking about, Dr. Sandra, if you can, please. Now that we unlock the funding side with Eli, we're exploring how to use that funding wisely with the systems that scale through your presentation and your skill set. Go ahead, take it away, Dr. Sandra.
Thank you. Let me go ahead and share my screen. Okay, let me know if you can hear me clearly and see my screen.
We got it.
Great. Thank you so much for that wonderful introduction, Kirk. I appreciate it. And thank you, Eli, for kicking us off with such a great start. Funding is where it's at. We can't do anything without the money, correct? Okay, so today I want to talk to you about how to grow and scale your construction business the smart way. And I work with several construction companies, and one of the complaints that I get constantly is cash flow issues, systems issues, fundamentals. And today we want to address that. What exactly do I do? So this is how I always introduce myself, not by a title, but I help business owners like you, construction business owners like you, to break free from what can become chaotic in the business, cash flow stress that we face sometimes, and the constant feast and famine that happens in our industry, so that we can build very profitable and well-structured businesses with a strong team, steady projects coming in, and a clear roadmap for sustainable growth. Now, who is this session for? Who will benefit from it? It does not matter where you are on your business life cycle. If you're a small construction business owner who just started, this is for you. It will help you to move beyond the project to project survival and help you to put systems in place so that you can move beyond survival to building a scalable operation. If you're a growing contractor, that means you're probably doing $2 to $10 million annual, but you're hitting that growth ceiling, yes, that we all hit at that point. Despite having a strong client demand, this is for you. There are some problems that come into play when we reach $2 to $10 million. And what tends to happen is that the systems or lack thereof cannot sustain the business at that level. And if you're an established builder, you're probably doing 10 million or above 20 million, you can also benefit from this presentation, because at this stage, you are ready to step into another level because you want to transform your company by using systems that generate consistent profits. Now, the learning objectives for today, I guess this is the professor in me. What are the 4 things? And it's hard for us human beings to hold more than 3 or 4 things in our minds at any one time. So what are the 4 things that you will walk away with? 1, you will understand the difference between growth versus scaling, right? They're not the same. The key difference between simply growing and strategically scaling your construction business. We will learn to identify the mistakes that we make and recognize those common pitfalls that prevent our construction business from scaling effectively. Next, you will be able to assess your business readiness to evaluate your company's potential across leadership, the systems, the financials, and the teams, and see exactly where you are. And then finally, how do you apply the scaling blueprint? You'll walk away with some practical steps on how to implement what I call sustainable growth with actionable resources. But before we talk about growing and scaling, I think we have to know what exactly we're building towards. I think the why is what will give you the momentum, the motivation to continue the heavy lifting when things get difficult, and they will. So you have to have a very big why. So why is it that you started your business? I'm trying to, wow. Yeah, sorry, I just had a little technical difficulty here, right? So the why. And I say start with the end in mind. Now, why would you be thinking about the end and you're just at the beginning? As any good builder knows, if you're going to build a 20 or 30-story building, the foundation has to be right. So from excavation, you have to know exactly what you're building in order to build it right. So start with the end in mind means that you have to define your vision. Clarify what success looks like for you, for your business, because your business is unique. How large do you want it to be? Are you trying to build $1 billion business? A $100 million business? What are the services that you want to provide? Are you a general contractor? Are you on the trades, maybe electrical, maybe air conditioning, flooring, roofing? Which markets do you serve? Is it private sector? Is it government? Is it commercial, residential, industrial? Define that vision. And then you want to reverse engineer success. Work backwards from your destination to identify the milestones and the requirements to reach that vision. So you're starting with the end in mind, reverse engineering to make sure that you're on that correct path. And then you want to balance personal and business goals. Your business should support your life vision. So you want to consider your lifestyle, your income needs, and the legacy that you want to build. Everybody's reason for building a business is different. And so your business should serve you and not the other way around. If we don't build it right, then we end up working for the business and in the business, becoming a slave to the business and not being able to tick those boxes. And then you want to create a timeline. Set realistic timeframes for your growth journey, because success is not overnight. No matter what anyone tells you, success requires patience and persistence. Now, what does success look like for you? For everyone, it's different. And so you have to define it and define it now. Not 5 years' time, not 10 years' time, not when you reach 10 million, not when you reach 5 million, but now. So, project success. That's completing quality work on time, on budget. But that's just the beginning. There is business success, which is consistent profits, predictable revenue, and systems that don't depend on. This is key. Having systems that do not depend on you. Otherwise, you cannot grow, you cannot scale. Personal success, the freedom to choose your projects. Yes, you don't have to chase every job. The freedom to choose your projects. Enjoy your life. Yes, I said that. Enjoy your life and build generational wealth. And legacy success, which is creating opportunities, not just for you, not just for yourself, but for others, your family, employees, investors, other stakeholders, building something that will outlast you. Now, why exit thinking matters. And why so early? What do you want this business to do for you in 5 years, in 10 years? Are you thinking of stepping back, relaxing a little, traveling a little, playing a little more golf? Are you looking at maybe selling it, passing it on to your children, other family members, maybe passing it on to employees who have worked with you over the years and you want to repay them for the effort that they have put in? Or do you want to just keep it, but having less day-to-day pressure and stress? So being like a chairman or chairwoman at a distance, looking at monthly reports or quarterly reports while the business is working for you. So the key takeaway here about thinking about what you're building from the beginning and the exit that you want is because the exit allows you options. It gives you options. If you're not thinking about this early, then what are you building for? So starting with the end in mind, wealth, financial security and growth, legacy, something you can pass on or sell, freedom, a business that works for you. Now, let's break down growth versus scaling. What's the key difference here? And sometimes persons use the words interchangeably. Yeah, but I think they're quite different. When we talk about growth, we talk about bringing in more revenue, right? Which starts with getting more leads, bidding on more contracts, putting in more effort. Then we have revenues rising, costs rising, both at the same time. And while you're growing, sometimes your costs are rising faster than your revenue until you get to that critical stage where it goes the other way. So growth is very costly. Bear that in mind. It costs to grow. It takes cash, capital, money, funds to grow. And you can hit that capacity ceiling quickly. You have to hire more staff, take on more projects, everything gets more, everything becomes more chaotic, especially if you don't have the systems, the processes, the infrastructure to coordinate and streamline that growth. Scaling, on the other hand, is different. With scaling, you're doing more revenue, but you're using smarter leverage. Think of leverage as the ability to do anything by exerting less energy. So your revenues grows faster than your costs are growing, which is what you want. You're designed for sustainable growth. You're optimizing your people, your processes, your systems, your technology, and using capital. And you are making sure that you're capital ready, as Elias was talking about, that your books are clean and you're actually trying to access capital before you need it. So if you're running around today trying to get some funds because you needed it yesterday, then we have a little bit of a problem, because you're going to have to take whatever rates you can get at whatever terms you can get because you're in a bind. So the key takeaway from this slide about growth and scaling is that growth is really about doing more. I think that's the easiest way of putting it. Growth is just doing more, but scaling is about doing better and making your business work for you. So look at it this way. It's like shifting from doing all the work yourself to designing a machine that does the work. That is scaling. When you have built a business, designed a business that works seamlessly for you, consistently producing profits at the right margins, then you have built a business that is scalable. Now, why is it that firms stall at the growth phase? And these are the four main reasons. reasons. There are many others, but these are the four main reasons. One, lack of systems. It sounds very simple, but if you have it all in your head, and it's very hard for you to translate, share that as you bring more team members on. Without documented processes, quality and efficiency suffers as you grow. It's just not possible. You cannot grow without systems. Now, the owner sometimes is too involved in the day-to-day running of the business. I know when you just start, it's impossible to avoid that. But as you grow, everything cannot depend on you. If everything depends on you, if every decision depends on you, then growth hits a ceiling. And unfortunately, you become the bottleneck in the business. So the owner being too involved in the day-to-day business is one of the main reasons why growth stalls. And then financial gaps. The weak cash flow cycles and poor financial visibility that limits expansion. The constant cry and complaint in the construction industry is cash flow, negative cash flow, not collecting on time, people taking forever to pay, slow pay, not honoring their obligation, not honoring their contracts. And literally you end up fronting the payments for most of your clients. And if you don't have a proper system in place to manage your cash flow, it is impossible to grow. Because as I said before, it takes cash to grow. And then having the wrong team or prematurely scaling before you're ready, growing too fast. Because if you grow too fast without the right foundation, just like building a building too fast and you didn't put in the proper foundation, you're going to end up with something that is not very efficient. I'm going to share with you 5 growth mistakes that I find with most of the clients that I work with. There is an ebook that I have that you can get for free if you opt in to receive the presentation, and you'll see the other 15, but based on time, I'll just share 5 today. Mistakes that stall your construction business. And the number one, as I said, and you hear this coming up over and over again, and for the business owners on the call, I know you can relate to this. Number one problem is ineffective cash flow management. Profit looks good on paper, but it's cash that pays the bills. Know your numbers. You have to know your numbers. If you don't know your numbers, I say you are flying blind and probably running on empty. Not a good recipe for success. And I'll say a little bit more about cash flow because it is so critical. It is the lifeblood of your business. And cash flow problems account for over 89%. That's almost 90% of small business failures in construction. So it's not ability, it's not getting jobs, it's not doing quality jobs, it's cash flow. So it makes it the most critical financial challenge in the industry. Because this gap is a reality. Most construction companies, you wait 60 to 90 days between spending on materials and labor and then receiving payment. So there is this gap. And if you have not planned effectively, then you find that you have these challenges. And just 4 quick things that you can do to address this situation right away. One, you want to front load your payment schedules, right? Structure your contracts with upfront payments and clear milestone payments. Second, strict receivable management. Invoice on time, follow up on your invoices. Implement a clear invoice terms with automatic reminders. It should just happen on its own. Not you trying to call somebody on the phone when you realize there isn't enough money in the bank account to make payroll, right? And provide early payment incentives. You're surprised how much more you collect earlier if you give a company 1% or 2% off, or offer them a 10% on the next business deal with you. All sweetens the pot for you to collect. Because every day that you have that money in somebody else's bank account, it's costing you more, right? Supplier relationship optimization, negotiate 45, 60, 90 days payment terms with your key suppliers while maintaining strong relationships. You may say, but I'm not been doing this for a very long time. Who would give me 90 days? I've had clients after having that conversation, sharing their story, their unique story. They've got 90 days from a supplier. That makes a world of difference in terms of your cash flow. And just cash flow forecasting. What's going to happen in the next 13 weeks? You should not be surprised. If you are getting financial surprises, then I know for sure that your cash flow forecasting is not on point. And that is one simple thing that you can leave today, put in place, even with an Excel spreadsheet, and have clear visibility on what's happening with monies coming in and monies coming out, at least for the next 13 weeks. So that was cash flow. The second one is over-reliance on manual processes. Whiteboards and inboxes cannot scale. It is as simple as that. Right? And you need to adopt some basic digital tools for project tracking, time management, document control, and definitely to manage your finance and accounting. Inadequate risk management. Now, everybody talks about bonding, getting bonded and insurance, but risk isn't just insurance. Risk is everywhere. Don't rely on luck. Create risk logs for every project with contract reviews and contingency planning. And poor project selection and bidding. This one is a pet peeve. Chasing every job because we want to be busy. Does not make sense to do a job, and at the end of the day, you're out of pocket, meaning you actually subsidized the job for the owner because you made no money. It actually cost you. Maybe you didn't do the estimating correctly, but poor projects, I say avoid them like the plague. Not all revenue is good revenue. Not all revenue is good revenue. Score the jobs before bidding based on the fit. Is it a fit for you? Maybe it's too small, maybe it's too big, maybe it's just not the right job. Maybe the client is not a good fit. The risk, your backlog, does it align with the staff, the team, the other projects that you have? And weak financial controls and performance visibility is the fifth one. You can't fix what you can't see. And worse if you're not looking. So the problems are there, but because you don't have the systems in place, you don't have a dashboard, you're not getting a weekly report, you're not getting a daily update, you're not checking your bank balances every day, you don't know what's going on, right? So use work in progress reports and real-time dashboards to close this loop between the field and the books. Job is done, did your invoice? You'd be surprised how many days are lost sometimes between closeout and invoicing. That's leaving money on the table and that's costing. So the question, is your business ready for scaling? Is your business ready for growth? Now, there are 4 key things that you want to look at as you think about your own business and think about how ready you are. Leadership and mindset, that's where it starts. I always say everything starts in the mind. Are you running the business or is it running you? Something to think about, right? The CEO mindset versus the project manager mindset. Just going from one job to the next. But are you using a CEO mindset where you're taking an intentional and strategic approach to how you're building and running your business? Then the operational systems. Do you have a system that is repeatable? Your processes are clearly documented? Can the business deliver consistent quality without you? There are many businesses that if you take the owner out of the equation, you end up with zero. Business minus owner equals zero. Not a recipe for growth or scaling. It means that the business cannot be sold. Why would somebody buy the business if you are the main engine? Because when you collect that check and walk, what would they be left with? And so from day one, you have to be thinking systems, processes. Then financial management and capital readiness. You need capital to grow. Brickell Capital Finance cannot help if you have zero visibility on your financials. You must have clean books. What do I mean by clean books? It can't be just historical data 3 years ago, you don't know what's happening today. So the data has to be current so that you can make decisions today based on real-time decisions, based on real-time information. So the question is, can you access capital when needed? And sometimes it's not, can you access the capital? Do you have the ability to access the capital? But if you are not documenting, if your figures are not inputted in a system that you can easily see what's going on, then you don't know. And when Elias asks you for the information, you don't have it yet. Right? And so one of the biggest mistakes that I see smaller businesses make, especially when they're starting out, is they just focus on getting a job, getting a good job, getting the next job, and not paying attention to putting in a proper accounting system, putting in a proper project management system. And the cost of these things have gone down so much that it should be easy peasy to get it done. And if you can't do it yourself, I know that's not your strong suit. You are focused on building buildings, building roads, building bridges. I understand that, right? But get the help that you need to put these systems in place. And then the team and the team development. You cannot build it alone. It's not possible, right? You need the right people in the right roles, and you need to be able to have that leadership bandwidth to grow. Otherwise, you can't if you're overextending yourself. And so a lot of business owners end up being firefighters. So they're very busy every day in the field, you know, chasing down everybody, doing everybody else's job for them. But it's not possible to scale that. Just it's not possible. And the key takeaway here is that you cannot build on a shaky foundation. Every builder knows this. But every one of these pillars can be strengthened. That's the good news. Every one of them can be strengthened. Now, if we look at how the cycle looks. So on this side, we have first the foundations where you're putting things in place, right? Clean operations, strong financials, clear leadership structure. Even if it's just on an organizational chart, you know, even if you don't have people in the roles as yet, but you know what you're building towards, right? Then stabilization, right? You must be getting consistent work, delivering consistent quality in these projects, building strong client relationships, having strong relationships with your internal team, you're improving your cash flow and your margins, and the company is stable, right? So the foundation, then stability, and then acceleration. So now you're strategically marketing, you're partnering with others, you're accessing more capital, you're taking on larger projects, and your hiring is more targeted. So probably now you're getting superintendents, you're getting for men, you're getting more project managers. So you're stepping more away from the day-to-day, and you're focusing on running the business. And now is a time where you can grow faster, you can scale. And then the fourth phase over here is the sustainability, right? So there's leadership development. Now you're looking at succession planning. You're looking at a brand. It's not just you now as an individual, but a brand, a legacy, and a business that can run without you. And if you see the order here, because if you try to do the succession, the branding, and the legacy over here without having the foundation, you could run into a spot of bother, right? So it's having a strong foundation, stabilizing that, then the acceleration, and then sustainability. So where are you on this path? As you think about your own businesses, where do you see yourself on the path? Are you at the foundation stage? Are you still building basic systems and structure? Is it that you're at the stabilization stage? Are you working towards just having consistent delivery and improving your margins? Are you at the acceleration stage where you're ready now for strategic growth and to take on bigger projects, which means you need more capital? Or are you at the sustainability stage where you are now focused on leadership development, a bench of leaders below you, and building a legacy to pass on to the next generation? So what's your next best step? So based on where you are, the question is, what's my next best step? Which pillar do you most need to strengthen? Now, we spoke about leverage before and how important leverage is as you grow and scale. And there are different leverage points that you can use, irrespective of which stage you are on that journey, right? The obvious ones: people, processes and systems, capital, your reputation, specialization. Yes, I think some businesses try to be everything to everyone, and you end up being no good to anyone, right? Sometimes attracting high value repeat business in the initial stages of your business is a function of specialization. So people now know you for X. It's like being a consultant. You consult with every company. That's good, but people know me for construction business, right? So it's niching. They say the riches are in the niches, right? So specialization is key. Data. Data is not just for big companies. Every company needs data. You cannot make informed decisions and fast decisions without having the right data. And marketing and sales. You could have the greatest thing on the face of the earth. If nobody knows that you have it and nobody knows about you, game over, right? People have to know that you exist to do business with you, right? So you have to focus on marketing and sales. And these are all the leverage points, and you don't have to leverage all of them at the same time, right? You can pick one or two and focus on that and use that as your leverage point to move to your next level. Now, the leverage that you use is also a function of the size of your business and where you are in terms of your revenue flows, right? So this is what I would call typical, but it does not mean that this is so for every type of business. You could have a business in startup that is doing 1.5 million, if you get my drift. You could have a business in this stage that is doing 5 million. So this is not set in stone, because one project at startup that is $2 million would take you up here. So I just want to put that disclaimer there. But all things being equal, in that early stage when you are about to get your first contract and you're at about $500,000, what you can really leverage here is your reputation. And that's why it's important to honor your word, keep your commitments, deliver quality work so that others will refer you. Specialization is your friend at this stage. You don't want to be doing everything. Basic capital, probably you'll be going to be using a lot of your own funds, but you're putting strong controls, building clean books so that you can access capital. Then I call the next stage the hustle stage. This is when now you are putting in the processes because you realize, hey, what worked last year is not going to work this year, right? Putting in the processes, you're probably bringing on a lot of subcontractors because you can't do all this work yourself. You know, you're doing marketing and you are for now going after working capital because you're growing. So that's what you want to leverage at that point. The next stage is the growth stage. You have to leverage people, software, data, and your expanded reputation, right? So you need to join in associations, different networking groups, different industry trade groups, professional organizations to get your name out there, your social media reach, you know, giving tips, writing white papers, if that is your forte. You know, I probably could be doing short videos, just giving information, building your own personal expanded brand. And I wanted to say something more about software and data, how important it is, especially with AI now becoming commonplace, literally commonplace. So the same way you use Excel and Microsoft Office and Word, yes, in the same sentence, if you're not using AI, you're leaving a lot of inefficiency and non-productivity. You should be accessing and utilizing AI in your construction business. And I'm not just talking just to write an email. If that's all you're doing, we need to talk, right? And then scaling. Scaling is when we're talking about building leadership, KPIs, you know, having a strategic capital plan and elevating your brand. Now, this is not just your personal brand, but in addition to your corporate brand. And the other stage is the enterprise stage. This is when now we're talking about institutional capital. We're talking about the culture of the organization, how people experience the organization, both internally and externally. We're talking about succession planning. Who's going to take your place? You know, what does that leadership bench looks like? We're talking about probably retirement. You're talking about becoming the chairman or the chairwoman of the board, you know, and stepping away from day-to-day responsibility. And you're talking about financial architecture, and that is where Elias and his team, again, will be there to support you when you're talking about millions of dollars now that you need as we talk about institutional capital, right? So these are the various stages and the different leverage points and what you can leverage. And you can just look at your own business infrastructure and see what would work best for you. As I say, every business is unique and you will determine what is best for you. Now, I'm gonna try and wrap it up as quickly as I can. So we have another 5 minutes or so to go. So putting all of this together as a small business, as a business in the growth stage, or as a business that is ready to move to the next step, which could be sustainability. And above our beyond, we have what we call the 3D growth model. And I want to share with you the design framework. And the design, DESIGN, it spells the different aspects of the framework. Easy to remember. And the first thing here is the direction of the business, because this gives you clarity, right? Clarity clarifies your long-term vision and it creates a detailed executive roadmap. Where you're going, how you're going to get there. And the experience. Experience is aligning the internal culture and the client experience that delivers the exceptional results that you want to give. So we're not just talking about the experience that your clients have with the company, but what your internal team, people work for you, how they feel about the organization, because they're your ambassadors as well. And then the systems. They develop repeatable processes that scale and maintain quality without your constant oversight. The innovation, consistently identifying what your bottlenecks are and implementing creative and efficient solutions. And the growth side of it is how do you optimize your sales, project delivery, and your marketing engine so that you can grow the organization. And the numbers are extremely important. To install a dashboard, you must have visibility on your numbers. Financial visibility is key, and these tools are very, very important. Now, I want to share with you a couple tools and templates that you will want to use. And you will get all of this information if you opt in. But to just go through it quickly, you should have what I call a tech backbone for your business. And it could be Google Workspace or Microsoft 365, whichever you prefer. You should be using for communication something like Slack or Microsoft Teams, and you should be using maybe Loom or anything else like that to just record videos for your SOPs. If you have to tell some people something more than once, you should record it so you don't have to repeat yourself. It's akin to cloning yourself. Right? Estimating and bidding, all of that should be automated. The communication and filing, and for heaven's sake, please use consistent file naming. It is amazing as something as simple as this that people spend so much time looking for a document they can't find because there's no conventional naming process. Something as simple as that, right? So pick what fits your stage. You don't have to do everything right away. Prospecting and marketing, those are some of the tools, like for example, HubSpot, your sales process, what do you have a follow-up email sequence? Project management, are you using any tools like Procore or FieldWire? And some of these tools are actually free to start. Pick something and test it. Financials and business management, I call these the CEO tools. So your financial tools are key. Maybe QuickBooks Online, but you want the one for construction, right? A cash flow dashboard, KPIs, tools like, CEO time blocking. If you don't block time, you can't focus on strategy. So what are my key takeaways for you today to succeed in your construction business? One, cash is king. Prioritize cash flow management above all else. It's the number one reason construction companies fail. Number two, build strong foundation, which means that you have to invest in processes, system, people, clean books in order to be able to access financing before rapid growth. Focus on relationships and embrace technology, right? As you grow and scale your operations, inboxes, whiteboards, and spreadsheets will not be enough. Now, your next steps, you want to download the resource guide that we have with the scaling kit. Everything that I've shared is available if you opt in. Complete your readiness assessment. This is something that you want to do on your own to identify your biggest scaling opportunities and gaps, and get the free ebook with the 20 mistakes that may be stalling your construction business. The thing is that scaling and growing is not random. Follow the proven path to build a construction companies that gives you options, wealth, and legacy building. Now, this QR as a QR code that you can just scan to access the link so that you can just fill that out quickly if you choose to opt in. And Tony Ann has just dropped in the chat the link if you just want to click on the link instead. So I think we are right there, Kirk.
Okay, thank you so much, Dr. Sandra. Hope you all had an hour long. Remember what Dr. Sandra and Eli were talking about. Eli is funding the fuel. Dr. Sandra was the growth engine. And remember for Brickell Capital Finance on that side, that those aren't one-time loans. These are funding solutions, right? Permanent solutions that you can dip into for your company and hopefully leads to exponential growth, working with both Dr. Sandra and Eli. Well, that does it for the hour. Hopefully it was powerful, impactful, and you're ready to go out there and scale, 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 and grow, grow, grow. Dr. Sandra, Eli, any last comments or any questions? I haven't seen one question in the chat. Nobody has any questions, I guess. No questions.
You know, Kirk, it is said that when there are no questions, either you were crystal clear or it was so muddy that they don't know where to start. I'm going to assume the former, right?
Well, I'm going to assume the format because this is not our first time doing it. And we try to anticipate every question in the presentation. So yeah.
Yeah,
So
yeah. But thank you, Kirk. Thank you, Elias. It was a
thank you,
pleasure
guys.
feeling, and we are here to help. Please reach out.
We
We're
do
here
have
to
a comment.
support your businesses.
Ada Esther Jimenez, great training. Thank you. You're welcome.
Thank you.
Hopefully it was impactful. Listen, we at least helped one person today, and that's all that
Yes.
matters. But we've served our mission. Amen.
Thank you, guys. If you guys
Yes,
need anything, let us know.
RDJ on their iPhone. Yes, the recording is available. Click on that link that Tony provided there, and you'll get the recording as well.
Thanks, and have a good day, everyone.
You too,
Bye, guys.
everybody.